Today, I'm going to look at Robinhood, the stock that I'm going to do my analysis on to see if it might make a good candidate to do cash secured puts and cover calls on. I already know the answer to that at least I know my answer. Could be a different answer for somebody else, but enough talking about that. Let's move on real quick. So what this series of videos is about, I'm doing a quick watch list review of stocks and ETFs. I'm basically explaining how I determine what stocks are being added to my watch list to potentially do cash secured puts and cover calls on. What I'm doing here today is not a trade alert. It's simply deciding if a particular stock or ETF may be a good candidate at some point to trade options on. And I would say, unless something major in the news comes along, whatever I determine today should stay true for the time being, like maybe up to several months. Now, when earnings are released or there's something big in the news about a particular stock, that could affect what I think today. However, I found that certain stocks that I'm trading have stayed pretty consistent on how I feel about them for months and months or even years at a time. And before we go too much farther, it would be really awesome if you would subscribe and like the video and do the notification thing. And it's not financial advice. It's just me sharing what I do with my money, good or bad. To review what we're going to do, I'm going to look at the business stability. I'm going to look at the revenue, earnings, somewhat determine if it's an established company, and determine if I feel okay if I end up owning the shares, if I do cash secured put and get assigned. I'm going to look and see what the analysts say. I'm going to see if they mostly are buy and hold. I'm going to see if there's any major downgrades by any of the major firms. I'm going to look to see if there's any collapsing targets. I'm going to look to see if there's any major red flags. And the third thing we'll do is jump over to Fidelity to see if there's a lot of open interest, if there's consistent volume, if the bid and ask prices are pretty tight. And most we're doing this on the monthly expiration dates. Some of these have daily and weekly expirations. I mostly trade monthly expirations, so that's what I'm going to be focusing on. Okay, I jumped over to Yahoo Finance here. So this is the free version of Yahoo Finance. And I do have an account, a free account. So when you log in, it will save your information when you come back to it. And when I say add tickers to my watch list, I use Yahoo here. And you can see my portfolio. I have 36 tickers added right now. And if you look down, you can see some of the ones I've added. Sure, you can get a lot more information if you subscribe to a fancier service or even subscribe to Yahoo, but everything I need to know, I can get from the free version at this point. So getting back here, looking at Robinhood, I'm looking at the 6-month chart here. You can see that it ran up pretty high, up to 150 plus. And today it's actually trading down quite a bit. It's down at 105 approximately, but we're not here today to look to see if today is a good day for trading any cash secured puts or anything like that. What I want to do is determine if this is something to keep an eye on that I want to add to my watch list to possibly trade later. So I'm going to go over here to this analysis tab. All right, so the first thing I'm going to look at is the earnings trends for Robinhood. You can see back here for the fourth quarter of 24, so about a year ago, it really beat earnings by 56 cents. Next quarter, it beat it by 4 cents, then 11 cents and 7 cents. And earnings will be coming out here soon on February 10th. So that would be something to pay attention to. So typically you don't want to be trading during earnings unless you are totally 100% confident in yourself that the price is going to move the direction that you want it to move. But typically there's already estimates out and the price has somewhat been adjusted if the earnings comes in about at the same as the estimate, but sometimes like this one over here, earnings actually came in a lot higher. And there's two tabs here. There's the GAAP, then the normalized, and you click on them, they're just a little bit different. Not much, but a little bit different. And quickly, let's take a look at what that means. So the GAAP is actually the official accounting standard. So this is what's required for the SEC. This is the official earnings that they have to report. The big thing about the normalized earnings is that this third thing right down here is that it removes one-time unusual items. So perhaps they settled a large lawsuit or something and it affected earnings. This is what they can report for this one over here. I'm just kind of showing this in case anybody's wondering why there's two little tabs there. And let's click on the annual earnings here to see how things have been going for the past couple of years. And you see in 2021, 22, and 23 had decent revenue, but the earnings were actually in the minus for these 3 years. But in 2024, earnings were in the positive. And if I look at the quarterly for 2025, you see that revenue went down just slightly, but in the last quarter, it went up. And back here, earnings were really good. And this goes back to looking at this one over here. So what I try to look for is their consistent increase in revenue and earnings over time. If you look at the annual, the revenue is pretty much going up, and the earnings have gone up the past year. So I'm looking at this kind of as a mixed opinion right now. So let's see what the analysts have to say. The analyst recommendations here, you see the dark green is strong buys, and then the green is buy, and then you got hold, and then you have underperform. So you can see for the past several months that it's been pretty consistent as far as the strong buy, the buy. It looks like less are saying to hold and more are moving their opinion to buy at this point. The other thing I like to look at is the price target. So the price target is right around 149, and today's trading for 105. So the 149 is pretty much getting back up there to its all-time highs that it reached about 6 months ago. I like looking to see what the latest information is as far as if anyone has changed their opinion anytime recently. The latest update was January 9th, so that's a few weeks ago, and their price target is 153. So over here. So if you look at the last 8 or 9 updates or so, going back to September, almost all of them have their price targets well above the current today's price. So that tells me, in my opinion only, that doing any type of trading, anything in the range 125 or less should be okay. And when I say okay, that means if I were to be assigned shares of Robinhood, I should feel comfortable at that price, knowing that the price target is close to 150 by these analysts. Now, are they right all the time? Probably not, but it should make me feel better. Okay, the earnings over here, though, I would like to have seen a better gradual increase, but I have to go back and see what this unusual earnings was here that shot way up. I don't quite remember what caused that. So let's jump over to Fidelity and look at Robinhood. Kind of ironic that I'm looking at Robinhood options in the Fidelity platform, but it's, business is business. I do have a Robinhood account, so I do use it. I use it mainly because the margin interest is very low compared to a lot of other brokerages. So anyhow, I clicked on the option chain here. I'm going to click on puts. And what we're looking at here is to see how much volume and open interest and all these good things are. So I'm going to look at the monthlies. So I'm going to hide the weekly option chain here. And February 20th is like a month away, so that's a good one to pick. So the current price is around $105. So let's scroll down just a little bit here. So if I was looking to sell cash secured puts on this, and if I'm looking around the 0.20 delta, that put me right around the $90 to $95 range. And you can see that there's a lot of open interest and a lot of volume. So the open interest is like the total amount of contracts that are floating around, and the volume is the daily action that's going on. So you can see that, for example, the 95 strike price for selling a cash secured put, there's a lot of action there. And then if you look, I think a psychological, people like going in even numbers, let's say like 90, 95, then jump up here to 100. There's a lot of volume here too. The other thing is too, as the price gets further away from the current price, instead of increments of like $1, so like 99, 98, 97, it jumps by fives. So at some point here, a few months ago, Robinhood was trading for 120s, 130s. And so these original strike prices were probably only in increments of 5. So when people initially got into these option trades, the only choices there was like 90, 95. And so that's probably another reason why there's a lot of action and volume. in these increments of fives. So I'm not going to sell any cash secured puts today on Robinhood. I actually already have some out there at about the 105 and 110 strike price. So I'm hoping that the price of Robinhood goes up within the next couple of weeks. If it does, then my options will expire worthless. However, if it stays at that price and goes down a little bit, I'll be the proud owner of a couple hundred shares of Robinhood at about the 105 to 110 price, which is fine because then I'll just wait and hopefully those analysts are right. It'll go up to 149 and I can sell and be happy. So that's what it's all about. So anyhow, come back here to the chart. And if I scroll down here, you'll see that Robinhood is a ticker that I'm watching. And it is one that I'm currently trading options on. So for me, this is a yes. This will be a stock that will be on my ticker list and also one that I'm currently trading. Okay, that's it for this video. Remember, this is not financial advice. It's just me doing my own personal analysis of whether or not I should add a stock to my list of tickers to watch or not. It's not like a deep dive financial analysis. It's kind of a high level overview only, and that's true for all these that I do. So if you like this type of thing, go ahead and give me a thumbs up and subscribe and do all that good stuff, and we'll see you in the next video.